Hello and welcome back to the Jerusalem Post. I'm your host, Jake Laznik, and today I'm excited to be joined by Sarit Firon, managing partner at Teammate Group and founding and managing partner of its venture capital arm, Team Capital. Sarit launched Teammate Capital in 2019, focusing on early stage investments in seed and Series A rounds, and has since become one of the most influential figures in Israel's tech investment landscape. Sarit, thank you so much for joining us. Let's get started.
Thank you, Jacob. I'm happy to be here.
Alrighty, let's dive right into it. So, what drew you to venture capital and early stage investing? Well, how did you choose this? And how did your background in finance and operations influence your approach?
Short question, but long answer. So I started my journey in the tech industry about 30 years ago. In the first 2 decades, I was a CEO and CFO in different companies in Israel and in the US. I spent 10 years in the two major hubs in the US, Silicon Valley and New York. And most of my companies eventually ended up either going IPO or being acquired. One of them, MediaMind, was acquired in 2011 for $500 million, the largest M&A at the time. It went public a year before, et cetera, et cetera. So I think that naturally I was supposed to be an investor of late stage, but I think that what draws me to early stage is several things. First of all, your ability to impact is much, much bigger. Second, I actually, when in my operational background, I worked in companies almost from seed till IPO or exits, and I think that I love more the creative stage of a company, which is mainly the first few stages. I think that maybe the best way to look at it is at my first investment in Datorama. The founders of Datorama, Ran and Effie, were employees of my previous company, MediaMind, that was sold for $500 million. And actually, when they started Datorama in 2012, they asked me to be the mentor, not their investor. But a few weeks later, I actually helped them to lead the seed round. And 6 years later, we sold the company to Salesforce for $800 million. And looking back, I think that for me, it was the aha moment of how investment really should be done. Because all my career before that, I raised money from the most prominent VCs, Accel Partners, Insight Partners, Sequoia, Greylock, not Greylock, Venrock. And the best thing or the best asset that they gave us was the brand name. And when was it helpful? Mainly when we wanted to hire executives in the US. And of course, connections to enterprises and maybe to some important people. But on the day-to-day basis, the support was almost zero. Today, I have to say that it changed a little bit in most of the funds, but at the time, it was really more about the brand, less about the hands-on experience and the day-to-day support. What I did in Datorama was completely the opposite. I actually didn't have a brand of an investor, but I had 20 years of operational experience that helped the company navigate through challenges, hurdles. Most of the time, companies need to cope with really the challenges and the problems and not the successes. And when looking at it, I said, I wish I had an investor that could combine the two. And with this mindset, I said, one day when I will become a professional investor, I would like to have both the brand and provide my hands-on experience.
Do you feel that a lot of companies starting off have this kind of barrier at the beginning where it seems difficult, and then after a certain stage, you can kind of let them run, they don't need your help anymore, they have it figured out? Like, is the difficulty more towards the beginning?
At the beginning, they're dealing with different set of problems. And later on, just for example, just setting the sales organization is always a big issue for every company. It's very difficult to hire salespeople outside of Israel, to motivate them, to incentivize them the right way, and to be aligned with the company's vision, etc. The problems are changing. But the other thing that happens in more mature companies is that they have already more mature management. One of the things that I see as my role when investing is to make sure that the companies starting to hire the right people the leadership level that can help the founding team to really take the company a longer way. Then I think that my involvement is less critical than compared to the beginning.
Okay, wonderful. So focusing on companies that are, just starting out, obviously the big topic that everyone is talking about nowadays, especially in tech, is AI. A lot of companies are using it, a lot of companies are integrating it. So how do you view the evolution of AI currently, where it's going, in like technology investment today? And are there any trends with AI that you're particularly excited about?
So this is, of course, the biggest question of the era, our era. So first of all, AI is not a vertical, it's horizontal, right? It really affects every industry and every person in the world. I think that as an investor, our biggest challenge is to actually identify the companies that have a chance, stand a chance in this era to succeed. And I'd like to explain. It's very easy to determine which companies are already obsolete in the era of AI. Because we know that a group that starting today and developing something that is completely based on AI can replace them in no time. It's more complicated when we meet companies that are based on AI, and sometimes without AI couldn't create or develop the product, and yet they are lacking another moat. If they are lacking another moat, it means that could be that within 6 months, a better team with a better AI model will replace them. So when we are making an investment decision, we make sure that not only that they are, have the capabilities and understanding and talent in AI, but that they have another moat that will protect them from competition down the road. What excites me in AI is that I see how it changes industries much faster than in the past. I see what it does to digital health, fintech, and cyber. And I have to say that today, if I look at the last 6 months, when meeting companies, it became much more exciting to see how quickly they can come up with the product, they can test it, something that in the past took much longer time.
Another, I don't want to say trend, but a current circumstance that is also affecting, Israeli high tech. Talking about global events, especially for those based in Israel, there's the ongoing war. So I want to ask you how you think Israel's tech ecosystem is adapting to the, I would say, the unpredictability of the war, and how it's dealing with that, and also where do you see the biggest opportunities and or risks given what's going on right now?
So first of all, I think that it's important to say that the tech industry is incredibly resilient. It's really, I think that we've been proving it again and again since October 7. I think that also before, during COVID, and during the judicial reform, but more so after October 7th. And just to give you a few examples, we had in our portfolio companies 25% that were drafted for a duty reserve, and 2 companies that their CEOs and sometimes additional founders that were absent, 2 of them, 2 CEOs for almost 5 months. And we actually entered to their companies to really replace them until they are coming back. And yet these 2 companies that I'm mentioning now, one of them raised their A round in December, and the other one raised their safe round. And to see the determination of coming back from such a difficult war with such a business gap that the company created because of the ups and not only of them, but other people, and then to close this gap so quickly was amazing to see. And I think that another phenomenon that I saw, that all the people that stayed back worked twice as hard as before, just to make sure that there will not be any negative impact on the company. So I think
the challenge really like drove them.
Absolutely. And I think that this is, part of the Israeli nature. And I think that this is what protects us for the last 70 years. But I'd like to say something else that is very important. I think that the year before the war, when we had this uncertainty around the political issues, was much more negatively influencing the ecosystem, the tech ecosystem. This is the year where most of the foreign investors left Israel or actually sat on the bench and waited to see what is going on and when it will end. Nobody believed that Israel is going towards something that seems to be less of democracy. They have so many other alternatives to invest in. So if Israel is not stable from political perspective, they shouldn't be here. This was their perspective. I talked to many LPs, and some of them told me this directly. Some of them were more polite about or around this issue. I think that what we saw after the October 7th, that the first quarter really was, we saw a decrease in investment, foreign investment, and also in the initiation of course, new companies, because many of the people were in the service. But from the second quarter until now, until today, for the last year and a quarter, we see an increase, a steady increase in foreign investments. I think that what's happening is that eventually they see the resilience of the Israeli market. They understand, they see the performance of the companies that are great, not all of them, but many of them. They see the superiority that we have in different fields, such as cyber, definitely in defense tech, and they are coming back. Some of them are even opening offices in Israel. I think that when the war will end completely, we'll see even, another uptick in their, investment in Israel. And I think that it will impact so positively our ecosystem.
So even though there are obviously unideal circumstances and it's difficult on everyone, it's really incredible to see the resilience and opportunities that the workers at these companies who remain are really able to find and push through. It's really inspirational. So now I wanna go back to you for a little bit. What was your, I would say, logic or motivation to transfer from executive leadership roles like CEO and CFO to founding a venture capital fund? Was it meaning? What brought that change about?
I think that like many things in my life, it more happened to me rather than, I actually planned for it. But really the seed started with the Datorama. And I think that I told you before, the realization that someone like me with the 2 decades of experience, how I can help shaping up companies more quickly, and how I can prevent them from doing the same mistakes that I did before, helping them to navigate through all these challenges. I think that this realization made me think that I need to do it at scale. The only way to do it at scale is actually to become an investor, early stage investor, and then to be involved with these, wonderful teams that we have in Israel from the very beginning. So I started this quite accidentally. So Datorama was the first accident, if we can call it this way. And
Happy accident is what, yeah.
A great accident, absolutely. And then I joined as an LP to a co-investment VC called the Circa, which later on I became the managing partner of, and actually the sole investment partner of the second fund, where I was able to make many investments, actually 29 investments, out of which 19 exited. I think that 6 unicorns among the exited companies, an additional 4 unicorns that are still in the portfolio, like Highbob, Tipalti, etc. And the only thing that bothered me in this fund that is excellent, with the best performance maybe, and I continue to be an LP in this fund, is that spreading my experience into too many companies didn't provide the companies what I wanted to provide. So I thought that on a personal level, I need to establish a VC that will lead investment, not co-invest. So we'll make fewer investments, larger checks in, again, fewer companies, but then really lend my experience to these companies. At the same time that I started to think about, starting my own venture, teammate partners Nadav and Yuval came to me and they actually proposed that we will do it together. So I will create the investment arm of Teammate. Until then, Teammate was a company building platform. They built companies in cyber, later on in fintech, later on in digital health. And the combination of creating an investment arm with a company building platform for me was amazing because it was fulfilling my vision. As I told you before, I think that an investor needs to combine the brand and the hands-on experience. And Teammate brought tons of hands-on experience on company building, on the company building level. In order to build companies, they needed to have go-to-market people, BD people, hiring people, recruiters, technologists, and all this goodness was landed also to the portfolio companies that I was able to invest in. So the 1 + 1 was suddenly equals much more than 2, and this is why I decided not only to establish a new VC that lead investment, but to do it together with Teammate because I thought that this is the ultimate fulfillment of my vision.
I know that you have a BA in accounting and economics and also a diploma in advanced accounting studies, both from Tel Aviv University. So I wonder if you could tell me how your education in those or from Tel Aviv in general, how that helped you with where you are today.
Yeah, this is also a great question because until I finished my tenure in Price Waterhouse, I thought that this was the biggest mistake going and studying accounting, but I'd like to explain why. First of all, I enrolled to physics in Tel Aviv University, and really 2 days before the study started, I actually took a bus to the registration office in Tel Aviv University and asked them to replace it with accounting and economy, just because I looked for financial security. This is what I needed. I came from a family with low means and I needed to take care of myself. And I thought that physics, with a BA, I will be just, a high school teacher, and I didn't think that it will achieve the financial security I'm looking for. So therefore, I decided to just move to accounting and economics. I have to admit that studies themselves were boring for me, mainly accounting, but eventually it's a tool. Then one of my professors actually brought me into Kesselman, which is Price Waterhouse. And I hope that it will be much more interesting than studying accounting, but it wasn't, unfortunately. Being an auditor wasn't what I was hoping for to be, my interesting thing in life. And I knew that I need to make a change. So one option was to leave the office and see what I can do with accounting outside of the Big Four, outside of the accounting ecosystem. And the other one was to go back to university and study something else. I thought about medicine or architecture at the time, but just thinking of, to being poor for additional few years wasn't, something that was very attractive for me. So I got to become the controller deputy at the RAD group. Later on, I became controller. And very soon after, I became a CFO during the IPO in '97 of Radco, the company that actually worked, or it was one of the companies within the RAD group that I joined probably a year after I joined the RAD. As a CFO, I started to realize that accounting is a tool that makes you gives you the ability to really build the foundations, understand the foundations, and then on top of it to build a strategy. Without very solid and strong foundation, you can't really build the strategy, you can't execute. It's really extremely important. This was the first time when I started to realize that my studies were actually very important, and they gave me maybe one of the best tools that someone needs if he's going to the financial or business career or business.
Yeah.
In investment, it's even more helpful, and I'd like to explain why. What you learn in accounting and in the accounting firms like Pricewaterhouse is, first of all, how to identify the entire thing that you're looking at. It could be a company, it could be a problem, it could be a project, whatever it is. Just identify what is the whole is not very straightforward. Once you do that, you need to find the holes, then dig deeper, go out, dig deeper, go out, without losing the context. I think that my ability to not lose the context when I digging deeper is because the tools that I got as an accountant, this is the way we do audit, this is the way we act. And I think that it's extremely helpful when I see a company, I'm trying to understand what I see in front of me, but then starting to dig deeper, but not lose against the sight for what they do, what's the problem that they are solving, how big is the market, etc., but yet be able to be granular enough and also to look at the bigger picture when you need to look at the bigger picture.
Well, that was definitely an interesting arc, but I'm glad that has a good ending. All right, so I just wanted to end off here on a note, as someone who's involved in early stage funding, and you've also helped create multiple unicorns, if you have any useful piece of advice for early stage founders looking to raise capital and scale successfully. Obviously, you can't give away everything you know, but maybe some morsels here and there that someone who's watching this could take with them.
Yeah, I think that founders needs to understand that the entire journey is full with challenges and junctures where you need to decide whether to go this way or that way. Many times there are more than one good answer, but you need to be very determined in order not to waste resources and waste time. Founders needs to know their markets the best compared to anyone else. Sometimes I meet founders and I'm surprised to see that they don't have good answers when I ask them about the market size, the market dynamics, etc. This is extremely important. They need to be devoted for excellent execution. Without excellent execution, you waste money, you waste time, and the competition will, just pass you, and this will be very difficult to close the gap. They need to surround themselves with excellent people on their managements, on their boards, as their advisors. In the early stage funding, they need to pick not only the right VC, but the right partner that they think that can give them value and that they have the chemistry, etc., to work with. They need to be coachable and flexible. I think that this is one of the, or two of the most important traits for people to be successful, to listen, to absorb. They don't need to do everything that they hear, but they need to be flexible enough and coachable enough. Sometimes people with experience have a lot to say or to help them, but eventually they need to understand that building large companies is not a straight line. It's not easy. It's, again, as I said, it's full of problems and issues that you need to tackle on a daily basis, and most of the times, many problems every day. So you need to love it. You need to love to work in an uncertain environment, because it's an uncertain environment. And they need to have the passion. Without the passion, they cannot go through this journey, because on one side, it's the most fulfilling journey and the most exciting journey. But I have to admit that it's also the most difficult journey. I think that it's amazing, but people that go this direction and would like to build strong, large, scalable companies needs to love the entire thing, and not just the good things about
Not
it,
the good, yeah.
but really everything about it. And it's not easy.
Okay.
Just one thing about Tel Aviv University. First of all, I have to thank them for being so flexible and give me the opportunity to really change 2 days before the year started from physics to accounting. The other thing that I'd like to say is that I realized it only in hindsight, where many of the friendships that I created in Tel Aviv University were some of the most important friendships, but also connections that helped me to navigate through the tech ecosystem or business ecosystem. And I think that it's a lot because of the people that go to Tel Aviv University, and definitely because of the professors, and not to mention the professor that actually brought me to Price Waterhouse.
Amazing. Well, Sarit Firon, thank you so much for joining us.
Thank you, Jacob. I enjoyed our conversation.
Thank you.